Welcome to today's discussion. We're diving into the Harvest MicroStrategy High Income Shares ETF, a product designed to offer investors high monthly income alongside exposure to MicroStrategy stock. It's a unique approach, and we have an expert here to unpack it for us.
The ETF leverages a covered call writing strategy, a sophisticated approach that allows for income generation while still participating in the underlying asset's price appreciation.
So it's not just about the dividends, but also about capital appreciation potential?
Precisely. The covered call strategy aims to maximize income while mitigating some downside risk.
Intriguing. Let's delve into the specifics of this strategy. Can you explain the covered call strategy in more detail? How does it work within the context of this ETF?
The ETF writes covered call options on a portion of its MicroStrategy holdings. This means they sell the right, but not the obligation, for someone else to buy the shares at a predetermined price, the strike price, by a specific date, the expiration date.
And the income comes from selling these options?
Exactly. In exchange for granting this right, the ETF receives a premium. This premium is the income generated. The ETF's product sheet mentions a maximum right level of 50%, meaning they write covered calls on up to half of their MicroStrategy holdings.
So there's a trade-off. If the stock price rises significantly above the strike price, the ETF misses out on some of that upside potential, correct?
That's correct. The upside is capped at the strike price plus the premium received. However, the downside is also somewhat protected, as the premium offsets potential losses if the stock price falls.
The ETF focuses on MicroStrategy. Why is that, and what's the significance of its connection to Bitcoin?
MicroStrategy is known for its substantial Bitcoin holdings, making its stock price somewhat correlated with Bitcoin's performance. This provides investors with indirect exposure to Bitcoin, a highly volatile asset.
So investors get a blend of traditional stock exposure and a bit of cryptocurrency exposure, all wrapped up in one ETF.
Right. Yes, it's a unique combination. It's important to note that the correlation isn't perfect, and the ETF's performance will still be heavily influenced by MicroStrategy's business fundamentals.
And the risk profile of this ETF reflects this blend of exposures, I presume. The product sheet mentions a high risk rating. What are the key risks associated with investing in this ETF?
The primary risks stem from the volatility of both MicroStrategy stock and Bitcoin. The covered call strategy mitigates some downside risk, but it also limits upside potential. Furthermore, there are risks associated with the active management of the ETF and the inherent complexities of options trading.
So it's not a low risk investment, but the potential for high monthly income is a significant draw for some investors.
Precisely. The high income potential is a key selling point, but investors need to carefully consider their risk tolerance before investing. The potential for high returns is balanced by the potential for significant losses.
And the tax efficiency mentioned in the materials?
Yeah.
The materials highlight the tax efficiency of the covered call strategy. How's that work?
The income generated from writing covered calls is often treated as capital gains, which are generally taxed at a lower rate than ordinary income. This can be a significant advantage for investors, especially in higher tax brackets.
So it's not just about the higher monthly income, but also the potential for tax savings?
Exactly. This tax advantage can enhance the overall return for investors. However, it's crucial to consult with a tax professional to understand the specific tax implications in your individual circumstances.
That's excellent advice. Let's move on to the practical aspects of investing in this ETF. The ETF is listed on the TSX, which offers Canadian investors convenience. What other key details should potential investors be aware of?
The ETF distributes income monthly, either in cash or through a DRAP, a dividend reinvestment plan. The management fee is 0.40%, which is relatively standard for actively managed ETFs. It's also eligible for various registered accounts like RRSPs, TFSAs, and RIFs.
So it's accessible to a wide range of investors. What about the historical performance?
The provided materials only show a very recent inception date, so historical performance data isn't yet available. Investors should carefully review the prospectus and other fund documents for a complete understanding of the risks and potential returns.
That's a crucial point. Always do your due diligence before investing. The website mentions similar ETFs focusing on other companies like Tesla and Coinbase. How does MSTY compare?
The core strategy remains consistent across these ETFs. Active covered call writing on a single, high-profile U.S. stock. The difference lies in the underlying asset. MSTY's focus on MicroStrategy and its Bitcoin connection differentiates it from ETFs focused on Tesla or Coinbase, offering a distinct risk-reward profile.
So investors can choose the ETF that best aligns with their specific investment goals and risk tolerance.
Precisely. Each ETF offers exposure to a different company and therefore a different set of risks and potential rewards.
The importance of reviewing the fund documents cannot be overstated. What should investors look for in those documents?
The prospectus is the most important document. It provides a comprehensive overview of the ETF's investment objectives, strategies, risks, and fees. Investors should also review the ETF facts and other relevant materials to gain a complete understanding of the investment.
And what about the ongoing monitoring of the ETF's performance?
Regularly reviewing the ETF's performance and comparing it to its benchmarks is crucial. Investors should also stay informed about any changes in the ETF's investment strategy or management.
This highlights the importance of active engagement and informed decision-making. To summarize, the Harvest MicroStrategy High Income Shares ETF offers a unique blend of income generation and growth potential, but it's not without its risks.
Absolutely. The high monthly income is attractive, but investors need to understand the limitations of the covered call strategy and the volatility of the underlying asset. Thorough due diligence is essential before investing.
And the tax efficiency is a significant potential benefit, but should be considered in conjunction with a qualified tax advisor. Are there any other factors investors should consider before investing in this ETF?
Investors should assess their own risk tolerance and investment goals. This ETF is not suitable for all investors. Diversification is also crucial. This ETF should be part of a well-diversified portfolio, not the sole investment.
So it's not a set it and forget it type of investment.
Definitely not. Active monitoring and a clear understanding of the risks involved are crucial for successful investing in this ETF.
So in conclusion, the Harvest MicroStrategy High Income Shares ETF presents an interesting opportunity for investors seeking high monthly income with exposure to MicroStrategy and its Bitcoin connection.
However, it's crucial to remember that this is a high-risk investment. The potential for high returns is balanced by the potential for significant losses. Thorough research and understanding of the investment strategy are paramount. Investors should carefully consider their risk tolerance and investment goals before investing. The information provided in this discussion is for educational purposes only and should not be considered investment advice.
That was a great discussion. Thank you for sharing your expertise.